Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for February 14th, Valentine's Day. Happy Valentine's Day. And we are at February 2022, and the time about 7:15 in the evening. All right, let's talk about the events of the day because they're going to affect everything. Later in the day, we're now hearing that after German Chancellor Scholz, I think I said that right, met with President Zelensky of the Ukraine, what took place was all of a sudden we're hearing President Zelensky say, maybe we'd be best off not going for a NATO membership. Now, that would change, you'd have to change the constitution of Ukraine because it's in their constitution that they're supposed to go for that membership. But what if they decided not to? Because it is something they're never going to attain. It's really that simple. Russia doesn't want them to have it. They got 130,000 troops and counting on three sides. They're completely cornered. They got the sea exercises going. This country stands no chance if it's going to go for a NATO membership. I mean, it's just the reality of the day because nobody's there to protect them. You're seeing all the NATO members will give you armaments, will give you everything you can. You waste your people. You let them fight the Russians, and God knows how many of you will die. 50,000, whatever it's going to be. It could be more. The landscape will be destroyed. Cities that are functioning and villages, they'll be destroyed. Is that what you really want? And that's probably a good thing that German Chancellor Scholz got him to say. Now, with that having been said, the Chancellor is going to Moscow. And he'll probably talk to President Putin, and maybe, just maybe, there's the semblance of a breakthrough and diplomacy can gather. Tomorrow will not be, in my opinion, the invasion day because of that trip taking place by the German Chancellor. Once he's on an airplane and gone, if he hasn't convinced President Putin, your guess is as good as the man in the moon, the next step. If Putin rejects it out and out, why not just go for the land grab? You got everything there. Nobody's going to stop you. The world will condemn you, but they condemned you years ago with Crimea. I hate to say it the way I'm saying it. It's the reality of the situation, and it's a sad situation. I feel bad for the independence of Ukraine, but maybe they stay independent by not getting a NATO membership. Maybe they say, we're never going to deploy missiles in this country. We're going to be more like a Switzerland? Other countries like that? Maybe. I'm just giving ideas. I don't know. It's changing so fast. I'm not making this stuff up. It's changing that fast. You go to bed, you wake up in the morning, and it's a whole different world because it's changing on you literally moment by moment. So we got to get back to where that becomes in the background. We've accomplished nothing. The U.S. word is no good in Europe at this point, other than for our NATO members. We're there with them. But for other countries, satellite countries outside of that, what are we doing? We're probably meddling. That's what people seem to think. And if you go to foreign press, there's a lot of talk of that. Okay. So let's get back and stop meddling and talk about the Fed. So, again, the next set of inflation numbers in March probably sets whatever's going to happen. If inflation on its own suddenly peaks out and comes down, great. Did you watch and read the study released by the Chicago Fed today? Chicago Federal Reserve went in and said, hey, the pandemic caused people to relocate, change, and do other things with their jobs, knowing that they could demand more money and get it. Apple today went out and raised the salaries for all its retail employees. So, you're looking at this wage inflation is very real, and that doesn't go away. You don't next month say, things are better, the COVID's gone, we're going to reduce what we pay you. That doesn't fly. So that part sticks. But other inflation, I question that. All the goods, the chips, all that stuff, the key is the Biden administration has to get the ports and drivers to get that stuff out of ports into where it belongs. Not move it from the port to another empty lot somewhere and it all sits because you don't have the drivers and the way of getting it through the economy. That's where this market has to go. And who's the new guy? Budovich, is that it? From Indiana? I don't know. Doesn't seem to me he's doing the right job. But that's me. IBM. I want to finish this today, so I'm going to ask you right now. Write me, if you're watching it on YouTube, write it there. Which ETF or stock do you want me to cover starting tomorrow for a week? We'll end it next Monday or Tuesday because President's Day, and then we'll come right back to the market with another series when I ask you, so tell me that now. But in looking at IBM, there is no trend. I think that's the first thing. If you look at even a weekly chart, you have a higher high, lower low. Yes, it's a story of a company rebuilding, rebranding itself, and doing actually a fairly good job at it. But when you look at the daily chart, it's leaked away. So up here, the market was looking pretty darn good. Market had a story going for it, but all of a sudden, as the market did this high and then the break like that, game over. Now you're into the correction where this is now your resistance point, and that's what the markets tend to do. You'll see this pattern over and over on charts. So where are key moving averages? Because when I put the swing line on, I'm in a downtrend. Lower highs, lower lows is the definition of a downtrend. But I like to filter it with where am I at in relation to key moving averages. So the 18-day average is here. Here's my theory. When the market is above the 18-day average, I'm looking for potential buy signals. When it's under it, I'm looking for potential sell signals. It's the simple bias. And from there, if I have the swing line down and that down, I've got a couple of the elements looking for prices. Where's the first spot from here that it should stop? Well, the next big moving average is the 200-day. Should that give ground? Another one's 128.51. The 100-day, and I always look, where's my good friend, the Bollinger Band, and that happens to be tying itself in with that 100-day. So I'll stick my neck out. I think the pros, if they get there, if they're short, they're covering their shorts. All of it? Well, I'll stick my neck out. Yeah, all of it. You're not embedded. You're getting down to that number. I think they'll cover their whole position if they're in that. Apple. We had talked about Apple. It was overbought. Mentioned it over here. We also said, is it embedding? So embedding is so important. At the end of this video, I'm going to have my embedded ad there. Take a look at it. You learn so much if you learn how to work with embedding. So both numbers are the slow stochastic, over 80, over 80, over 80, embedded. There's a trick to it. If it loses the embedded reading, the odds are you're going right to the 18-day average. Now, when it does it in the same day, there's no play, obviously. But if it takes and leaves you some room in there, well, oftentimes you can go short that market. And that's what happened. XLF, you have an overbought market that's pulled back to the 100 and the 18-day average, but it's in an uptrend. So let's not be just in a classroom. Let's talk real world. If you buy the market, where would you have a stop? Under that low. Is that an ideal position as you're still in a market that is overbought? No. Overbought doesn't attract buying. Overbought either becomes embedded or the way you correct it is prices drop or go sideways. That's how they correct. Disney, a lot of resistance at that Bollinger Band. What would I teach you? Out you go. And that's what I said, out you go. I like Disney. You heard me talking about it. I certainly talked about it in my morning updates because I said Jets was moving to the upside on that play. And I said, it's going to carry these other leisure stocks with it. And that's what it did. XLI, the little bit you know about me talking about Bollinger Bands, you hit it today. In unison, what would I tell you to do if you're sitting with me? Got it. I'd be telling you that is where the pros are covering their shorts. You have a market that is still in a downtrend. There's nothing wrong with reselling the rally, but right there is where I think they're taking money off the table. In the semiconductors, you have the trend up, the bias down, and you're correcting, present tense, correcting an overbought condition that is out of it with the close today. So now, any moves back over the 200-day in the gray and the 18, I think the pros jump back in on the long side, looking for the upper Bollinger Band again. in XHB. Why, if interest rates are going up, do you want to own the housing stocks right now? I'm nervous about it because mortgage money is going to be more money. Now, there is something else that's happening. Mortgages don't have to run as far as you think. If this curve yield flattens out, what if it even inverts? But if doing that, you're not taking that 10-year that many mortgages are based off, they key off that particular number, or 30-year, going to take it up dramatically. It's here. It's at this part that the Fed's controlling things, and I think people are worried, and that's why the back end's not soaring, that if we get these 5 to 7 interest rate hikes, recession. And I've heard the people say, no, this time will be different because of COVID, and that money was never something put in, so you're taking it out. Nonsense. High interest rates slow down the economy. As a businessman, you can't think as an economist. Hey, my numbers, whoa, I got to pay that much interest. I got inflation here with my input costs, my labor costs, and now you want me to eat that too? There's only so much pricing power that you have. So you got to worry, and that is the dance that the Fed has to get involved in. It's not just saying, as Bullard is screaming, 50 points now, 50 again, we'll be in July at our 1 point or more, and we got to immediately take off the balance sheet. Hold on, Nellie. Let's see another set of inflation numbers, and I'm agreeing with him if they're strong. In his camp. What if it's 7% and it fell a half point? Why am I running and doing that? The Fed doesn't move that way. We're not in an emergency yet. We could be in a bad one if the number in March is a really hot number. I don't know what it's going to be. I'm guessing it's still hot. XLE. Okay. Distribution, be careful. If you lose that embedded reading and you're flirting with it, watch in the morning. If you see the energies are down a lot, probably means there's movement positive in the Ukraine, energy prices, the bid of war. Even though I think it's a wrong bid, I never will think that Russia's going to shut off the energy to its biggest customers in Europe. This is a fight about the Ukraine. This is not a fight with Germany in particular, with France in particular, any of that. It's their fight about a border issue they're having with the Ukraine, right or wrong. Do I think they'll shut off oil and use that as a weapon? You'd have to be so hard-pressed, because what would that do to their revenue stream? Boom. What would it do in forcing Europe to suddenly turn its eye and get away from Russia as an energy provider? Once you get another source, America saw that as South American grain came on market. China moved there, and my gosh, be careful. You don't want that to happen. And I think Russia's playing this, again, smart. GLD. Up to the upper Bollinger Band. This is where I'm expecting problems to develop. Same in GDX right now. I think professional money came out of this market today. First challenge of the 200-day average upper Bollinger Band. If it goes higher, wonderful. If it goes into war, there'll be another way to enter. But that is a high probability it's going to have problems there. That's all it is, a probability. Nobody knows, least of all me, apparently. XME, I love it on the upside, but not here. Overbought into the Bollinger Band, you own it. I'll back away from it. Copper, I'm very bullish. I believe $5 copper, unless something dramatically changes today. In other words, recession word really becomes real. Interest rates are slowing world economies down, killing them, basically. Barring that, I see the opposite. We're all coming out of COVID. Factories are going to want to go back to work. People are getting their jobs, be it higher jobs, whatever. We have a lot of goods that have to be made. Copper's used in electric cars. I can go on and on. I happen to think copper's still very powerful. TLT, well, obviously the mood of the day is one of higher interest rates. You don't want to be long this market. You want to be short, but it's also telling you don't go short under the Bollinger Band. It'll pop on you. FXE. Okay, Europe setting back. Okay, that makes sense for the moment. The U.S. dollar's got a bid because of the warfare. The euro's going to come down off of that. Now the question is, do we walk in the morning and that warfare is suddenly tamed down? I don't know if that'll be the case. What would happen then? Probably get a bid again back here. We saw Ms. Lagarde today speak before Parliament, answering a lot of questions as to her theory on interest rates. You're going to have to see inflation prove itself that it's got staying power to her for her to jump fully both feet into the camp that wants to raise rates aggressively. I listened to that. That's what I walked away with. As I said, you want to learn about Bollinger Bands. Do yourself a favor. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.